Hello there and welcome. Today we're diving into a system every single employer in the UK has to get their head around. Single Touch Payroll. And to make sure we get this absolutely right, we're using a fantastic guide put together by the experts over at Pro Tax Accountant. So let's jump right in. You know, if you're a business owner, this is the kind of question that can genuinely keep you up at night, right? You're busy running your company, you're trying to pay your team correctly, and then boom, a letter from HMRC lands on your desk. It's wild how one tiny slip-up in your payroll reporting can spiral into this huge, stressful mess. But look, it really doesn't have to be that way. That's what we're here to do today, cut through all the confusing jargon and, frankly, the fear. We're going to break down exactly how the UK's real-time payroll system works, point out the common traps, and show you what you need to do to handle it all with complete confidence.
We've got a really clear roadmap for this. We'll kick things off with the basics. What even is Single Touch Payroll? Then, we'll get into the interesting bit, the big promise of the system versus what businesses are actually experiencing. After that, we'll tackle the major shakeup for the 2025-26 tax year, give you a super practical checklist, and then point you to where you can get expert help.
Okay, so let's start right at the beginning. When we talk about Single Touch Payroll, what exactly does that mean?
Right. First things first, a little bit of clarification. You might hear the phrase Single Touch Payroll, especially if you're looking at how things are done in other countries. But here in the UK, HMRC's official name for it is Real-Time Information, or RTI. They're basically the same idea. And the idea itself is simple, but it was a total game changer. Instead of setting up all your payroll info for one massive report at the end of the year, you now send it to HMRC in real time, every single time you pay your staff.
And wow, this slide just nails how huge that change really was. Before 2013, it was a world of paper forms like the P35 and P14. You had totally separate paperwork for new starters and leavers. It was a manual, paper-heavy nightmare for a lot of people. The RTI system just swept all of that away. Now everything from starters and leavers to pay and deductions for your PAYE or pay-as-you-earn system is sent electronically, right from your payroll software, on or before payday. It's a massive shift from reporting once a year to reporting live.
So in practice, the day-to-day process is dead simple. Step 1, you run your payroll like you always do. Step 2, the moment you do that, your software automatically sends something called a full payment submission, or FPS, straight to HMRC. And step 3, HMRC has that info instantly. When it works, it's brilliant, a totally seamless flow of data. But that brings us to our next, very crucial point.
You see, the system was rolled out with some really big promises. But for so many businesses, the reality on the ground has been, well, a bit different. This is where things get tricky, so definitely stay with me here. From the government's point of view, RTI has been a massive success. By getting earnings data in real time, they've been able to slash the number of errors in tax credit payments. And this number here just says it all, a staggering £672 million saved by cutting down on fraud and error. That's the promise in action.
And the benefits promised to businesses sounded pretty great too. The whole pitch was a simpler, easier pay process, a reduced admin burden, no more of those dreaded end-of-year forms. And because HMRC has fresh info, your employee's tax code should be way more accurate. On paper, it looks like a total win-win.
Let's make this real. Think about Chloe, a freelance designer in London. Her business is taking off, and she's just hired her very first employee. The idea of a simple, automated payroll system with less paperwork, that sounds like an absolute dream come true. It means she can focus on her clients, not on drowning in tax forms. This is exactly the kind of person the system was supposed to help.
But then, we smash into the reality. This headline from Accountancy Age from earlier this year, covering a huge study by the Chartered Institute of Payroll Professionals, tells a completely different story. It points to some deep, systemic flaws that are causing chaos for businesses up and down the country. So that report uncovered what it called a data black hole. What does that mean? Well, it found that the payroll submissions that businesses send are often getting misallocated or lost within HMRC's own systems. And this creates ghost errors and discrepancies that can just sit there for months, even years, with businesses having absolutely no idea how to fix them.
Now, this is where it gets really mind-blowing. Check this out. An analysis of disputed charges found something truly shocking. In cases where a business challenged a payee debt, a whopping 78% of that debt turned out to be spurious, meaning it was caused by a system glitch or a duplicate record on HMRC's end, not a mistake by the employer. Let that sink in. Only 22% was down to a real employer error. The takeaway here is massive. If you get a notice, there's a huge chance it's not even your fault. So let's go back to our freelancer Chloe. She's been doing everything by the book. But one morning, a letter from HMRC arrives demanding £6,000 for a discrepancy she knows nothing about. She's sure she's paid everything right, but the system says she hasn't. And now, instead of running her business, she's stuck in this bureaucratic nightmare, trying to prove she doesn't owe money she never failed to pay. This is the reality for thousands of businesses right now.
And this brings us to an absolutely critical pro tip from the experts at ProTax Accountant. When you get a notice you know is wrong, it's so tempting to just ignore it. But that is the worst thing you can possibly do. You have to engage with HMRC. If you don't, the issue can escalate, sometimes to the point of legal threats, all over a debt that wasn't even real in the first place.
Okay, now as if navigating all of that wasn't enough, there was a major shakeup that came into effect for this tax year, 2025/26. This is something every single employer in the UK needs to know about right now.
So up until recently, when you sent your payroll data, you only had to report an employee's hours in these wide bands. Band A for up to 16 hours, Band B for 16 to 24, and so on. But from the 6th of April 2025, that all changed. It is now mandatory, not optional, to report the exact number of hours each employee has worked in each pay period. We're talking about a much, much finer level of detail.
So why the big change? Well, the main reason is to give HMRC the data it needs to enforce the national minimum wage way more strictly. By comparing the exact pay with the exact hours, their systems can automatically flag potential underpayments. For you, as the employer, this means your internal time tracking has to be absolutely spot on. Any little inaccuracies could get your business flagged for a full-on, and believe me, very intrusive, national minimum wage review. So, with all these challenges, from system errors to new rules, it's pretty easy to feel a bit overwhelmed. But you can get ahead of it. Here's a simple 3-step checklist to get your business on the right track. First, take a good look at your payroll software. Get in touch with your provider and confirm it's fully compliant and handling this new mandatory hours reporting correctly. Second, audit your own data processes. How are you actually tracking hours? Is your system robust enough to capture the exact number for every person every time? This might mean you need to tighten up your timesheet systems. And third, train your people. Make sure whoever runs payroll understands these new rules inside and out. It'll save you a world of pain down the line.
And that really brings us to our last and, honestly, probably the most important point of all. With all these moving parts, payroll just isn't a simple admin job anymore. When you add up the risk of those crazy system-generated spurious debts with the ever-increasing complexity of the rules, it's pretty clear the game has changed. Trying to go it alone can be seriously risky. Having an expert in your corner isn't a luxury. It's pretty much essential for staying compliant and, being able to sleep at night. So it's really important to say that while this guide gives you a solid overview, it's not a substitute for professional advice that's tailored to your exact business and situation.
Because every business is unique, you really must consult an expert before making any big decisions. For specific advice on Single Touch Payroll or anything else tax-related, you can get in touch with the team who helped put this guide together. ProTax Accountant. Their details are right there on the screen for you now. And if you want to dig into this topic in even more detail, the team at ProTax Accountant has a fantastic, really comprehensive article on their blog. You can find it at the link you see here. And finally, if you found this breakdown useful, please do subscribe to the channel. We're always putting out new guides to help you cut through the complexity of UK tax and compliance. Thanks so much for watching, and we'll see you in the next one.